Have you ever wondered why your perfect chart setups hit your stop loss before skyrocketing in the right direction? It isn't bad luck. It's a liquidity hunt where your retail patterns serve as the counterparty volume for massive institutional fills. Today, we dismantle the retail illusion and reveal how the big players use your textbook setups against you. The pattern is a lie, not in the way a man lies to your face with malice and forethought, but in the way a well-dressed stranger deceives without speaking a single word. You believe him because he looks the part. You believe the chart because it looks the part. I have spent 40 years on the floors of the exchange and at the ticker, watching men lose fortunes to formations they learned from books. Head and shoulders, double tops, triangles, flags. They carry these shapes with them like talismans, as though geometry itself holds some sovereign claim over the movement of prices. Every pattern the textbooks teach, every formation the financial newspapers diagram with arrows and dotted necklines, is known to the men who matter. And the men who matter are not you. They are not the retail speculator reading his charting manual in the evening hours. They are the composite man, that great coordinated intelligence of the large operator, the syndicate, the institutional hand that moves price with deliberate purpose. That man has read your textbooks. He financed their printing. He knows every stop order you will place before you place it, because 10,000 men before you placed it in the same location for the same reason. The more widely shared a piece of market knowledge becomes, the more lethal it becomes to the man who relies upon it. Think carefully on that. Hold it. When a pattern enters the textbooks and every trader in the country learns to recognize it, it ceases to function as a map. It becomes a mousetrap. The bait is certainty. The mechanism is your own conviction. And the hand that sets the trap belongs to the composite man. Picture the price action on a stock that has been advancing for many months. The tape has been telling a story of steady accumulation, of informed money quietly absorbing supply at lower levels, walking price upward with disciplined patience. Now the advance has matured. The composite man has built his position at a cost far below current prices, and he faces the one problem that separates large operators from small ones. He has too much stock. He cannot simply sell it. If he were to offer his entire line to the market at once, price would collapse beneath the weight of his own liquidation before he was half finished. He needs buyers. He needs them in size. He needs them carrying conviction. And he needs them at the very top. So he builds a pattern. Imagine the tape now. Price has been moving upward. It makes a strong thrust, then pulls back modestly. That is the left shoulder. The pullback is controlled. Volume on the decline is lighter than on the advance. This is important, though most men never notice it. Then price pushes higher once more, past the prior peak on what appears to be renewed enthusiasm. Volume swells. The newspapers write favorably of the company. The retail speculator grows excited. He buys. That is the head. He has purchased from the composite man who is quietly distributing his line into every eager outstretched hand. Now the price eases back again. The composite man is patient. He has been patient for years. He lets price settle, absorbs a small amount of fresh supply, keeps the decline orderly and unremarkable. Then price rallies once more, but this time it fails to reach the old high. It reaches perhaps 3/4 of the way. Volume on this last rally is visibly weaker than on the head. The tape is whispering the truth. If a man has learned to listen, that is the right shoulder. Now every textbook trader in the country is watching. They see the pattern. They know the pattern. They have memorized the neckline, that level connecting the two valleys between shoulder and head. They know that when price breaks that line, the short sale is confirmed. They are coiled. They are ready. Their stop orders are placed just above the right shoulder high, because that is precisely where the textbook instructs them to place it. And who benefits from those stop orders sitting above the right shoulder high? The composite man. He still has stock to sell. He needs one final surge of buying to absorb the last of his line. Those stop orders above the right shoulder are not his enemies. They are his salvation. He orchestrates a final lift in price, a shakeout just sufficient to trigger those stops, pull in a last wave of hopeful buyers and unload his remaining position into their willing hands. Then and only then does he step aside and allow price to fall where the genuine lack of support demands it fall. The pattern did not predict the decline. The pattern manufactured the crowd whose orders made the decline possible. That is the distinction that will save a serious man's capital, if he can hold it clearly in his mind and refuse to let it blur. I have heard men say that chart patterns fail because of poor timing, as if the remedy were a tighter stop or a more precise entry. That explanation misses the truth by a considerable distance. The failed breakout, the shakeout above the neckline, the stop hunt before the anticipated move. These are not malfunctions of the pattern. They are the pattern performing its precise intended function, for the benefit of the party who engineered it. Your stop order is the mechanism, your pattern recognition is the trigger. The composite man simply pulls it when he is ready. Now let us speak plainly about what genuine tape reading demands, in contrast to what pattern trading demands. Pattern trading demands recognition. You learn a shape, you wait for the shape to appear, you act when the shape completes. It is mechanical, it is comfortable, it removes the burden of real thinking. A man can feel very scientific about it, very systematic. He can show you his notebook of confirmed formations and believe with sincerity that he possesses a method. Tape reading demands something considerably harder. It demands that you follow the story of supply and demand through price movement, volume, through the relationship between effort and result on every single trade that crosses the tape. It asks you to question what is occurring beneath the surface of price. When price advances on heavy volume, you ask, is this genuine demand-absorbing floating supply, or is this professional selling into retail enthusiasm? When price declines, you ask, is real supply overwhelming demand, or is informed money shaking loose weak hands in preparation for a genuine markup? These are not questions a geometric shape can answer for you. Only the tape answers them, and only if a man has developed the patience and the knowledge to read it honestly. Consider the following. Two different stocks can form patterns that look identical on their respective charts. In one case, the formation represents a genuine distribution campaign conducted by the composite man, and it will resolve in a significant decline. In the other, the formation is an accident of price movement with no orchestrating intelligence behind it, and price will reverse sharply and punish every short seller who relied upon the shape. The pattern looks the same in both cases. The underlying story of accumulation and distribution, the behavior of volume throughout the campaign, the character of the rallies and the reactions, that story is entirely different between the two. The man who reads only the chart cannot distinguish between them until his stop has already been hit. The man who reads the tape has been following the campaign for weeks, and he knows which story is which long before the pattern becomes visible to the crowd. I want to be precise here, because I am not arguing that chart formations have no relationship to market reality whatsoever. I am arguing something more useful. Patterns are lagging descriptions of campaigns that the composite man has already been conducting on the tape for a considerable period. By the time the shape becomes recognizable to the pattern trader, the distribution campaign is in its final stage. The composite man is completing his work. The pattern trader is arriving at the conclusion of the story, at the very moment the last and most dangerous trap is being set. The serious student of markets must learn to read the campaign at its inception, not at its conclusion. He must learn to read the behavior of price at particular levels, whether supply is being steadily absorbed by strong hands or whether it is overwhelming demand, whether the action suggests professional accumulation or professional distribution. He must cultivate a sensitivity to volume that confirms or contradicts the apparent price story. He must learn to notice the moments when effort and result are disproportionate, when price advances only a small distance on enormous volume, suggesting that the advance is being heavily sold into by professional sellers, or when price holds firm through a period of sustained apparent pressure, suggesting that an invisible hand is quietly absorbing everything the frightened public offers to the market. These are the faculties that matter. They are harder to develop than the ability to identify a shape. They require genuine judgment rather than mechanical recognition. They require the student to form a hypothesis about the intentions of the composite man, and to test that hypothesis continuously against the evidence as the tape unfolds. There is no shortcut to this. There is no pattern for it. There is also a particular kind of pride at work in chart reading that every serious student must learn to recognize within himself and to resist. When you see a pattern forming in textbook perfect fashion, there is a feeling of discovery, of having caught something the market is preparing to do. It feels like skill. It resembles skill closely enough to be genuinely dangerous. The composite man has been at this work long enough to understand that feeling very well indeed. He manufactures it with care. The formation you are admiring with such satisfaction is something he has constructed precisely to produce the emotional certainty you are experiencing at that moment. The market is not a puzzle that yields to cleverness. It is a sustained contest between informed money and uninformed money, conducted over years, at a scale far beyond what any individual trader perceives when he looks at his chart. Patterns are the language the strong side uses to communicate with the weak side, not in the manner of a teacher instructing a pupil, but in the manner of a hunter laying out bait. The weak side hears the message and believes it has understood something. What it has understood is the invitation to walk forward and spring the trap. The only honest education the tape ever offers is humility, not the passive humility of a man who has surrendered his ambition to understand. The deep, earned humility of a man who has learned through many painful lessons to observe longer than he acts, to listen more carefully than he speaks, and to ask always, before he commits a single dollar of his capital, whose interests this price action is genuinely designed to serve. That question, asked consistently and answered honestly, will tell you more than any pattern ever printed in any book. The tape speaks plainly to the man who has first accepted that he does not already know what it will say. That is where real trading begins, and where most men, to their great cost, never arrive.